Midnight, a privacy layer on the Cardano chain, is one of the best performing assets. The question is why? Who is buying here? Who's selling here? Let's have a look at the on-chain data, the data most people aren't considering, to try to figure out how much higher the asset might potentially go from here. We are already at 11 cents, and in the last week we appreciated by 68%. Midnight had a quite significant airdrop across many chains just to generate some attention, and then people had to go to Cardano in order to claim their tokens. There's a big question how much a protocol can really be privacy focused when it starts out with an airdrop of that size. Here's the token on Cardano. Interestingly enough, Cardano Scan has advertising for casino platforms now. And here's the token on the Binance Smart Chain. We can do some analytics over here. We've got 6,000 holders. Here's where the airdrop happened. Some people sold their allocation, and now the positive price action brings in some new wallets. Now in the middle, we see the number of wallets with at least $1,000 worth of the token. On the right side, it's $10,000 worth of the token. Again, that's only on the Binance Smart Chain. But really, the actual trading doesn't happen on the Binance Smart Chain. It mainly happens on the centralized exchanges. So people are claiming tokens and then sell them on the centralized exchanges. And the market makers are willing to buy up that supply. Now, in the last 24 hours, we saw 5 billion worth of trading volume on Bybit. At the same time, we did have a little bit of perpetual futures trading volume, 741 million on Binance, but it's still less than what we see on the spot market. And this might flip quite soon. One reason why the price appreciates, why the number of holders is not necessarily growing that much, I believe, is the perpetual futures. Because many people don't trust this price rally. Many people are betting on falling prices on the perpetual futures. And so the market makers just short squeeze everybody that's betting on falling prices. The centralized exchanges, they own the supply, and the retail investor is betting on falling prices and gets wrecked in the process. And so the open interest, the amount of bets on the price, continues to rise as retail continues to bet on falling prices. And the market makers aren't yet squeezing aggressively enough. Here is the trading volume on the perps over time, and here is the liquidation. By the way, if you so far enjoy this content and you don't want to miss future videos, then feel free to subscribe. I publish videos regularly over here. And surprise, surprise, the shorts get wrecked. And there's a good chance that this will continue. Or in other words, the Night token might continue to outperform other cryptocurrencies in the short term. This is Night relative to the others' market cap. There is a lot of volatility. Again, this creates liquidations. This is good for market makers. Volatility is exactly what they need. This also creates more trading volume, more fees. And as the perpetual futures market is growing, as more and more open interest is getting opened, more and more bets are made on Night, price will likely continue to go up. Not because it's fundamentally a great project, not because there's so much demand on chain, simply because the tokenomics of the project are that concerning with the ongoing airdrops that everybody is inclined to bet on falling prices. And so then the market makers just show how that can be a very risky game when there's too much attention on something. I'd be extremely surprised if the Midnight token can keep its $2 billion market cap. Very likely 1 year from now it will be lower. But in the short term, since there's so much speculation around the token, and since so many people are still betting on falling prices without having gotten liquidated, we might continue to rally. So my prediction here, right, I don't have a crystal ball, but my prediction is that very likely the price will go up from here, and then at some point when there's enough pain in the market, we will see the turnaround. We will see how the market makers will offload the token again. But that's going to happen, once again, once people stop betting on falling prices, when the funding rate is more balanced. As long as this graph is in the red, which by the way comes from coinglass.com, I think there's a very high likelihood that the Night price will continue to rise. When then enough people have given up, when then enough people got liquidated, the funding rate will normalize and the price will come back down to earth. And with that, of course, the open interest will go down as well. There's a good chance that your portfolio unfortunately looks like this. There's a reason for that. The altcoin market got crushed this year. And it was all those influencers that get money from those projects to sell you those altcoins. That's why you are in losses. The fundamental problem is the conflict of interest. The influencers get money, they talk positively about a project, but they might not even invest in that project themselves. They maybe get a token allocation that they then afterwards sell. I've not seen a single influencer on YouTube that's actually willing to share their own data, that's willing to share how they are trading, how they are outperforming just buying and holding Bitcoin. Because obviously the vast majority of altcoins does not outperform Bitcoin. Now I try to be different on this channel. I don't just share my own data of my own trading. I'm getting into the ring, trade for the members of this channel, and everybody can participate. So in July of this year, we started a premium capital pool, and every annual subscriber of the community had the option to invest. And while Bitcoin fell by almost 25%, we made 17% in gains. And it's not just the delta that I like, it's also the very low correlation. As in, when we went sideways, we made money. When we went down, we just lost a little bit. But in general, the strategy has very little correlation. It's very different to the general market where everything goes down, everything goes up at the same time. When prices are going up, it's not that hard to find winners. When prices are going down, it's much harder to generate profit. I want to share the data in a bit more detail. So the average depositor, by the way, we had several millions worth of deposits. The average member deposited 17.6K at the end of the 5-month period. That turned into 20.3K, so an average profit of 2.7K, which equates to 13.4%. Now after a 10% fee, that ends up at 12%. Now 13.4 is different to 17.3 that I showed over here. And that's because a lot of members first waited before depositing. They didn't enter on day one. They first wanted to see how some profit got generated. And because of that delayed exposure to that capital pool, the average return is lower compared to the return if you started on day one. But of course, the real number that matters more is the performance from the very beginning. If we then annualize this, we get to a value of 45% or 40% after fees. If you bought and held Bitcoin during that time, you lost. If you went into the capital pool, you won. If you measure your capital after that 5-month period in BTC, then you'd now have 1.51 BTC after fees. And so those are the kind of numbers I do not see any other influencer sharing, right? Most people just say buy this token, or I called it right over here and I made it all correct over there. But really, when the rubber hits the road, when it's really about proving oneself against the market and potentially also showing this very transparently to a community, then very few people are willing to do this because it's hard to beat the market. It's much easier to just record videos, keep yapping, pretend to know everything. And while I'm not saying that I know everything, and while I do have bad trades as well, I am at least getting into the ring. I'm at least showing what I'm doing. I'm willing to share whatever success or failure I produce in the market. Now this is just a test of 5 months. Here is my personal trading results over the last 5 years. So this is the monthly alpha over buying and holding Bitcoin. This averages out to 1.6% per month. The dotted line over here, that's the 12-month average. Had I just dollar cost average into Bitcoin, I would have gotten the return by this white gray line. But because of relative valuation trades, because we made money when everybody else was losing, we are able to outperform just buying and holding Bitcoin. That's the hard part, right? We always need a benchmark. When everything goes up and we just take on more risk by buying an altcoin, of course we can outperform. But if things go sideways, if things go down, that's where we can see who's actually swimming naked. When the tide is going down, that's when things get tough. So it seems like you're still around. Even after all of those losses, you still try to learn about crypto, and I applaud you for that. But probably if you haven't made any money in the last year, it's better to change gears. So you can simply just trade whatever I trade actively. So I'm sharing every single trade that I do in real time in premium. That's $125 per month. And because I'm having a good day, I'm sharing one trade here for free. That's actually a premium trade, which is Pudgy Penguins relative to Solana. So you're going short Pudgy Penguins, you go long Solana, and just trading this long-term trend. And if you're making money with that trade, feel free to reinvest this into premium if you don't want to make the jump yet. But Pengo is one of those highly inflating tokens, and it still has a lot of room to fall. especially if the market overall continues to suffer. But then of course, if you don't want to do the active trading part, you can also join the next premium capital pool where the trades will be executed automatically. This time it will not just be 5 months, but 12 months of trading. There is the manual route. There are several tutorial videos on how to set up all those positions. It explains how to make money when pudgy penguins continues to fall, how to have proper risk management in place, and how to execute everything manually. But if you don't want to go the manual route, then instead of subscribing monthly, you can subscribe yearly. Now, currently this is still crossed on the website. This will get updated very soon. The next copy trading vault will launch in January of 2026. And so feel free to join. It's 10 months of premium, right? It's $1,250. You can also just start off with the monthly subscription and then switch over to yearly afterwards. But if you want to start out with yearly directly, again, if we are able to keep the current returns, which of course is a big if, right? Nobody knows if this rate of return will stay. But if this 5-month test is representative of what's going to happen in 2026, then the break-even point for premium with the $1,250 is an investment of roughly $3,000. So you don't necessarily have to go in with 17K, right? Once you go in with a bit over 3K, you already have all of the content for free. And it's not just tutorials, there's also premium updates. There's also various on-chain tools, etc., to help you improve your crypto game. If it's the very first time here, feel free to give this a like. It will help the channel grow. Feel free to also subscribe. I publish videos regularly. There's a link to premium popping up here on the screen. Just click on that. It will lead you to the website. See you next time on YouTube or see you on premium. Cheers.